Coming up in this show, Avi's going to bring you a sample of stock sectors. It's a member video where he looks at XLK, the tech stocks, which are negative. I'm going to bring you analysis on the semiconductor stocks. Similar timing to the XLK per Avi's work, also negative. And we're going to look at an extended week of Give the Gift of askSlim, our lowest prices of the year, huge discounts, and we're going to send you back an Amazon gift card. And I'm going to bring you market analysis. We're going to look at the short-term analysis of the S&P 500 and the Dow. Projections for the next few weeks. The bounce into January that we expect. But how far?
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market investors had another choppy week last week on sharply weakening earnings prospects for a lot of key stocks, and an upgraded, stronger GDP, which means the Fed probably stays tight for longer, and comments from a well-known money manager that said the downside is the most obvious risk. Monday, stocks fell and rates went up. A few reasons. COVID was just roaring across China right now. Home builder sentiment came out at the lowest in 12 months, and the stock market just moved to the downside. Tuesday, markets were surprised by the Bank of Japan as they raised their rates. And what that looks like is the end of yield curve control. Now, they're denying that, but they are making room for rates to move to the upside. Of course, they were negative for so long, and things seem to be changing there, which they really need to do to get in line with the rest of the world. Tesla fell 8% early on as they were giving news that there were discounts in China, and then rebounded with the stock market, which ended up with small gains after some early losses. Wednesday was a strong update. Nike led the way, 12% gain in that stock on better earnings that were expected. There was a consumer confidence report that came out that showed a big rebound, and the S&Ps moved up almost 60 points. Thursday, there was a big downside reversal on a news-driven sell-off. Maybe it was just some extension of the current decline in the stock market, which we thought still had lower to go into this month. Got more to say about that, of course. GDP estimates on that upward revision, 3.2% for the quarter, and that made the market nervous about the Fed. But what really made the market nervous was well-known hedge fund manager from Appaloosa Management and the owner of the Carolina Panthers, that's David Tepper. He cautioned, and he said, central banks are telling me what to do. He says, I would lean to the short side in equity markets and also short bonds. That sent the market sharply to the downside, which was exacerbated by Micron's earnings, which were really bad. That killed the semiconductors. They're cutting their workforce by 10%. And NVIDIA, AMAT, AMD, they were down as much as 9%. Got a little bit of a rebound, but still most of that group finished down between 6 and 7%. And coming up, I'm going to show you 4 of those semiconductor stocks and the SMH index, and you will get a sense for what they're looking for in our analysis moving forward. So on that day, with all of that news with David Tepper and Micron and Tesla moving down 10% again as they offering big discounts in Model 3 and Model Y. Of course, they have Twitter problems, and the rest of the competition is just chasing them down. Well, the S&Ps got crushed. They were down as much as 115 points at one time. Had a good size rebound to only be down 56 points on the day. Here on Friday, which we have an early close on this holiday week, the numbers that came out were mixed. Consumer spending, inflation, though the PCE, which the Fed watches, is still up 5.5% year over year. It's been a very choppy day here on this holiday shortened day, and the movement in the S&P 500 has basically been between up 20 and down 25 back and forth. And a quiet day, of course, is expected here. And we are expecting some coming timing for the stock market to make a short-term bottom. And I've got more to say, a lot about that, a lot more to say coming up. For this time frame for the stock market, our analysis has shown that we expected December to be a weak month. That would be contrary to what a lot of other analysts would have thought. And the low was projected somewhere near Christmas towards the end of the year. So here we are, and a bottom is pending as far as we're concerned, a short-term bottom. There's still a little more room on the downside, which our charts will show you in a little bit. And the end of the year can bring some very funky movement in the markets as there's tax selling and shifts in allocation. And that's usually actually done before the last week of the year, maybe a couple days before. So don't be surprised if there's a lot of choppy action here in this next week, but then end up with a big try to the upside. Watch our analysis coming up in SPY and the Dow Jones Industrial Average, where we look at the short-term view. Here we are at midday on this holiday shortened day with only a couple hours to go, and the market's really mixed. Small changes on the week, with the NASDAQ being the weakest, down a little bit, the Dow being the strongest, up a little bit. Bond markets, well, they've weakened here in line with our expectations that they were making a top and the yields were making a bottom, and the 30's down about 3.5 points. That's significant. And the 10-year yields up 25 basis points. That's significant. And we did a nice job on timing those, and we're actually looking for 10-year yields to head back to the 4% range. Gold market, gold's around unchanged, silver's up about 50 cents, and since we're looking for a bottom coming in the dollar, we kind of think gold and silver are going to struggle a little bit in what are really overall upside phases for them. Dollar, small down week, it is trying to make that important bottom. Oil had a very big rebound. It has been very volatile, and the reason for the rebound is there's fears around Russian supply. Now, the European put that price cap in there, and Russia's answering by cutting their supplies. Now, we don't really know if that's really going to be true, and our work says that there's still big risk to the downside, and we expect the oil market to move down well below the $70 number again in coming weeks. Make sure that you get acquainted with us. Become a free member if you're not a member at any level, and you get some idea of the things that we do. You'll be notified about this show. On YouTube, please do subscribe to the channel. Click the notification bell. Give us a thumbs up. That does help us. And on Twitter, follow us at askSlim. For any questions about lots of things that you're going to say moving forward in here, please do write to Matt at askSlim.com. This is a preview of our stock sectors video. Matt does this every couple of weeks, and he gives you a sample here in this show of analysis of some of the things that he shows. He usually does a group and gives you somewhere between 8 and 15 different charts in there to look at. In this case, what we're showing is a short video here where he gives you the analysis in XLK. These are the tech stocks. This video, to see the complete video, you need to be a level 2, 3, or 4 member. So you might want to take advantage of our final week here of our Give the Gift of askSlim to be able to watch this full video and, of course, all of the great videos that we put out in our whole video library with just over 600 videos in there. So much you can learn from the work that we do. RV, show them XLK.
So this is the XLK, and what we have here is a dominant cycle right there, which is then broken up into minor halves as well. Now, what we are seeing here is that this is also in a period of risk. This looks a lot like this period right here, where we formed that low, got the bounce, which is what this is right there. And then now we are getting into that period of risk. You can see what happened last time. We had that very sharp sell-off on the downside. It's reasonable to see a sell-off here as well, and at least retest this old low at 112.97. This next low is due 1226 to 26, and overall we see good odds of a move down to retest that old low. And if it gets through that level, there is a wide zone from around 109 to 97 quarter or so. Levels on the upside come in 132.56 to 136.83, and there is a 78.6 at 144. If this were to move through that 78.6, it would say that something else is going on here on this weekly chart, but currently some of the evidence favors likely a washout low forming in that February time period in the XLK.
Super work on that. And I'm going to show you something going forward here that's in line with this analysis. All right, this is a look at the semiconductors, and per the analysis that RV showed this week in XLK, the tech stocks, well, this is pretty much in alignment with that, with analysis of the SMH, the semiconductor ETF, and then a look at AMAT and AMD and Micron and NVIDIA. Micron led the way on the downside this week in the semiconductor stocks, and I think that you're going to find this quite interesting. Let's take a look now as we switch over to SMH. So this is the semiconductor index that you can see right in here, and we're looking at the cyclical analysis, and this shows you the beautiful rhythmic action that you see right over here in these cyclical patterns. Remember that cycles are measured from trough to trough, and down over here where we look at the ideal, it just gives us the energetic movement. The importance is the shape that it takes, and you can see in here that this cycle was a positive cycle, such as this one here, because they made higher highs and higher peaks. I'm sorry, higher highs and higher lows, each of those. And then you had this big upside move where it got below that level, and that makes a left shoulder and a head. And then this failure very early and a breakdown from this low level showed you how that head and shoulders was formed, and then the market moving to the downside. And each one of these rallies hit important resistance areas and then sold off, just as you saw right over here where each one of those rallies dips after the rallies hit important supports. And those, when there's not much time to fall, we call those swamped, because the big energetic movement on the upside leaves no room for declines. In this case, the big energetic movements on the downside leaves a lot of room for declines. You can see what's happened in here is that you had this upside spike right over there, and you had upward momentum or an upturn in momentum, as you see here in the reversal scout, our proprietary indicator. And now you're getting a flattening out here in momentum and a pullback right there from resistance. So what this probably means, based on what we're seeing in here, is that there's some support in here, and we're looking for a stock market rally in January, and you probably come up back into these areas here. But then there is big risk over here where it comes down into March and potentially early April. And this is very interesting because remember, this is in alignment with our stock market analysis. So you can see what we're looking for is some choppy action right in here and then some downward movement that could be pretty significant. Let's switch over to the daily chart. Now, this was the weekly chart that we're looking at. And let's switch over to the daily chart. You can see here the beautiful cycle action. Whoops, let me just get rid of all that. And now what happened was that this nice upward cycle, which had good upward momentum, broke down as it got underneath this support level. And now this is set up for, as it hits the supports in here, some bounce in here, as we said in the weekly, but then likely getting up here somewhere in January and then turning down sharply again. Now you see this cycle right in here, bottoms right over here in late in January. Well, if you look at the dates on this cycle right over here, that bottoms in early to mid-March, in alignment with what we said on the weekly chart. So it probably gives you a rally and a sell-off, and then another rally, and then another sell-off. And this breakdown is over here that we said is very negative, and that sets up this weekly pattern in here on the weekly chart as a lot of chop right in here, and then ultimately finding its way to the downside in some significant way. So we would look for this to be the pattern that we see in the other semiconductor stocks. Let's just take a look here at the weekly charts as we look at a few others of the semiconductors. We'll start with Applied Material, AMAT. And you can see that this will pretty much match up with what we're looking at in here. So this is Applied Materials, and you can see it looks a lot like the semiconductor index. And again, what we're looking for is support here, a lot of choppy action right in here, and then sometime in January, a peak, and then moving down here into April. You can see that gives you maybe even some range area between 115 and down over here, 88 or 93, where you could do, some option strategies that work within that range. So that's Applied Material. Again, fails exactly from resistance and then comes down to this near support area and likely to get a choppy period here that results in a big move down into that March time frame. AMD is the next one that we'll look at, and you're going to see similarities in here. You see that big break in there as each one of those rallies failed from resistance, and now also this pointing out to that April low, and a lot of potential chop. And here we're looking at a potential range of around 60 to 81, and probably trading a lot in that area. Notice here you're getting the downturn in momentum. So another sign that a semiconductor is going to be range bound and then resolve itself to a good size hit on the downside. The next one we'll look at in here is Micron, which set the negative trend this week. And you can see right here, it looks very much the same. The problem is that this stock, Micron, is almost breaking down that support right now. So that means that the rally will be more shallow in here and then moving down again here into April. So when you get this rally into January that we're looking for, this would then be a sell, and we're projecting down to probably as low as $44 here in Micron. So that means if you get a rally up here into some resistance, which I don't have in here yet, and you see the momentum turn down right there, that means this peak is significant. And maybe you get up here into the low to mid 50s and then head back down to 45. So there's a pretty good idea of another chart that says that move down into March, April is pretty likely. And the last one we'll look at in here is NVIDIA, NVDA. It's so amazing that these stocks, they got bid up based on the shortage in the semiconductors, but then of course semiconductors are a commodity, and that reflects how these movements can be very large in the stocks as their fortunes for earnings change pretty significantly. The stock fails again at the resistance area, coming down now. The momentum is still a little bit positive in this one, so it gives you some sense that there could be an upside move that maybe equals this. Maybe it gets up to this 188, 198 area right in there before it then does turn down. So this one looks a little bit stronger than the other ones. At the same time, I would not look for it to get above that area of about 198 and then turn down again in here and take out this low somewhere around 150. So a lot of wide swings there that we're looking for in NVIDIA, and ultimately a pretty good size break again there out into that March-April period. A lot of synchronicity that we see there in the semiconductors between the ETF and these particular stocks. Also the same that we see with the XLK, the other tech stocks out there. And it just says to us that the sum of the evidence that we're looking at here is such that a rally into the early part of the year should be really held in suspicion, with a fairly large decline due out into that March-April period for the semiconductors, along with many of the other tech stocks, very much in line with what we're looking at in the stock market. All right, here comes the stock market analysis. We're going to look at the short-term view, but first, give the gift of askSlim. We have extended this, and this is the final opportunity. So here we go. This is the holiday special, Give the Gift of askSlim. We have extended this. Matt did a special a couple days ago, a live event, which had huge attendance from people that have given the gift of askSlim, received the gift of askSlim, or were interested in buying this gift. So many people saw this, and we had a lot of people tell us that we want that they want the opportunity to buy this in this week between Christmas and New Year's. Of course, they get gift money, so we're extending it for just 1 week. So you'll be able to do this through the end of the year. Special rates for our 3-month memberships. These are non-recurring. So if you love what we do, it's going to end in 3 months and you're going to have to resubscribe. So you won't be automatically renewed, and that's, of course, has some appeal to people. So give the gift to someone you know that loves trading or technical analysis. Give the gift to yourself. Great for first-time members. Use this special to try a higher level if you're a free member, level 1, level 2, and you can really benefit from what we show in these higher levels. To find out more information, go to the askSlim website and click the Learn More button at the top of the page, or for any question you might have on this, write to Matt at askSlim.com. Okay, here comes the stock market analysis. S&P 500 and the Dow Jones. I'm actually going to show the SPY, not the SPX. And if you want to get our full analysis with all of our charts, all of our indicators, all of the great work that Matt does every single day, you get the SIR Daily. This is amazing, available to level 1 through level 4 members. If you're a new member or a free member, you want to upgrade to this, 3 months, every single day, massive information, all of our charts and indicators on the 3 indexes that we show. That's $45 for 3 months. Unbelievable amount of information you're going to get. So if you're not a member now, try this and you will really get a sense for the kind of work that we do. Become a level 1 member and get that SIR Daily. All right, so let's take a look at these charts as we're going to look at SPY to start. For newcomers, this is cycle analysis, and it is just loaded with information. And when we look at the rhythmic motions in the market, the heartbeat of the market, on the bottom are the cycle brackets, and those show you the rhythmic motion. A cycle is measured from a trough to a trough, and there is common rhythmic action in there as you see the low here, and then the low here, and then the low here, and then here coming up. You can see that the formations that it makes gives us such important information. In other words, when this rally came and it peaked early on that abandoned baby, gave you a left-hand translation, broke under this level, and then told us it was going to decline through this time frame. In this case, it made a beautiful positive cycle with almost no time to decline. It told us it was going to make another high, and you can see that. Now this has broken that low, and a bottom is due right over here. And that is suggestive of the fact that when we get into the next rising phase, like right over here and right over here and right over here and right over here, the next rising phase is going to give you a rally. Now, when you get a negative shape that you have right in here, as we teach in our cycle analysis workshop, and you can learn about that by going to our workshop page, then you will get the sense for why we believe that this bottom is coming in here and that we're going to get a rally. VIX is due to make a trough in late January. In other words, the low in the VIX is expected to be somewhere fourth week of January. That's helping us project these rallies in here. So we're projecting January to get up to 397 to 403. That is based on the low basically being made in here. It might come down and test it in the next couple days, but we do think, as I said in my commentary in the beginning of the show, that it was likely that you would see some sizable up move in here. And again, our projection 397 to 403. The projection was up to 415 originally, but because of this breakdown in here, it lowers the odds of that. I would say where the odds were 65 to 75% of getting up here, that is now more like about 30%, and more like that 60-70% probability is into these zones right over here, which would not make a high as this cycle. Note in here that as of December 23rd, it's about 21% from its all-time high. And this, between these two blue verticals, is where the cycle trough is due to move up. The reason I'm giving you this 21% from the all-time high is because I'm going to show you the Dow Jones Industrial Average in a moment. But again, let's look at these key cyclical movements. This right over here, a positive cycle. In this yellow area is where the corrective phase is, and it would have fallen very hard if there was more time. In this case, there was more time, and in this yellow area right over here, it came down hard and broke that. In this case, somewhere out over here, in about the 3rd to 4th week of January, it sets up that next big decline, which we think is going to ultimately have an additional cycle out over here, take it out into March with lower lows out there. So I'm just giving you the short-term analysis here, but talking about that. So this rally right in here, expecting 397 to 403 on SPY coming sometime in January. That could give you some decent long side trades. And I want to comment that Dow and Dow stocks are much stronger. And if you're looking for stocks that are buys, look there, except maybe for the tech stocks, which still have, I think, risk, as we talked about earlier in the show. Now, as I look here, actually didn't want to put up the weekly, wanted to put up the daily here in the SPY, and now I'm going to switch this over to $DXY. And you can see here, as we look at these cycles right there, that I didn't mean DXY, $DJI. There you go. So we're looking at the Dow, not the dollar. That confuses me often. You can see in here that, again, we were looking for a low to come here in these coming days. Now, what I want you to notice is while the S&P 500 was down 21% from its all-time high, the Dow is only down 11.3%. Now, when I give my end of the year show, when I give that analysis, it's going to show that the Dow is likely to do much better coming into middle of next year than the S&P 500, as it's been doing right in here. And I think that the money is really flowing into those big old stocks and the industrials and the pharmaceuticals and some of those medical insurance companies, those are the ones that the money is moving into, and maybe even to some of the financials, and that's going to make the Dow continue to be stronger. For now, though, the pattern is similar. As you can see, it broke down under that low and is in a negative configuration in here. You can see in here that the slim ribbon PO on the bottom, when it's green, it reflects the slim ribbon. When it gives you the green arrows, it tells you about upside resumptions, as you could see right in here, and that now turned red. So for this to then be positive again, this would then need to turn green. Let's just take a look here a little closer, and we'll see in here what our upside projections are, and that is that we're going to see that because of this VIX trough that's due in somewhere around late January, we expect to get rallies up in here to mid to late January. The Dow numbers here are around 33,850 to 34,250 right in here. That's what we expect this low to get made and then be moving to the upside again here into January and then moving down again. So while the Dow is much stronger than the S&P 500 on an intermediate basis, it is now pretty much lining up with it. And that says to us that the same patterns pretty much exist in here that do in the S&P 500 at the moment, where it trades down into this time frame right over here. I'm just going to highlight that cycle for you to see, which is early February. And then the next cycle, which you can't see out over here, takes you into sometime around late March, which is where we think that ultimately the intermediate low is going to be made. So a Dow index that is much stronger than the market, pretty much in line with the S&P 500 right now, targeting 33,850 to 34,250 up into that January time frame, and then beginning to move down again in this very interesting period as we get into the end of the year, and what I think will be another potential fake upside move for the stock market up into January. We've had like 5 of those big upside moves, and this one in here very well could be in the 6 to 8% to the upside for these indexes. And though the Dow has been much stronger than the S&P 500, it's kind of an alignment right now. And again, I think I like the Dow stocks better, those stocks for the move maybe into mid-year of next year. But I'm jumping the gun in here, and we'll talk about that in another show. So that's a look at the stock market. Don't forget, the Give the Gift of askSlim has been extended. You buy one of these memberships for yourself or to give the gift. It's non-recurring. It won't be renewed. You'll have to renew that. And we're going to send you an Amazon gift card. Go to the top of the askSlim page, click the Learn More button, and you'll learn all about how to become an askSlim member for the lowest prices of the year. Based on this special. Levels 2, 3, or 4. You're just going to love that. If you're new, get acquainted, become a free member on YouTube, subscribe to our channel, like this video, give it a thumbs up. Watch our member videos in the playlists and past shows in there, and you'll learn so much about what we do. On Twitter, follow us at askSlim, and any questions that you may have, write to Matt at askSlim.com. I want you to be so unbelievably careful. It is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to sit